We had a very productive day in the market yesterday. Steady buying. I wouldn't say aggressive. We'll review some internals here in just a second, but it reminds me of the opening dialogue that I had for the Saturday live session this week, where I encouraged people to not speak in absolutes. We were very headline heavy over the weekend. And then we had some of the Western markets open up on Monday with circuit breakers down and all of these things. A lot of people were calling top again. And I'm not going to rant here today, guys. Don't worry. We have a lot to cover. But I was adamant in the fact that we must wait for confirmation. We are in a daily, weekly, and monthly uptrend. Until those things change on this channel, we're going to keep on looking for continuation setups to the upside as long as we do still have that uptrend intact, which is exactly what we got here. Ignore this massive wick. It reminded me of my Thinkorswim days here. TradingView, clean that up, please. Who am I talking to? They're not listening to this channel. Not yet. But anyways, guys, look, we had a productive day, right? Pretty much buying straight out of the gate throughout our indexes and some strength in some of the sectors that we'll review here today. I mentioned yesterday in the watch list that, what it would take to get me to initiate risk. And I did say getting through Friday's high was my first trigger. And then I said that I wanted violence out of internals. Guys, if you don't know how I use these market internals to judge in the moment market strength, broad positioning, momentum, okay? I do look very closely at internals on days when I am looking to position. It's based off of the SPY, off of the indexes, off of my triggers, the triple R. But when I'm actually looking to pull the trigger, I want to look over here at the internals and I want to see inflow. I want to see more stocks making highs versus lows. I'd like to see aggressive readings out of the tick. I will say that yesterday we didn't exactly have that, and I did take a position. I entered INTC yesterday, and I would say we didn't have aggressive signals here in the internals, but what we had was steady buying, okay, throughout the day. We were holding steady, and it was enough for me to initiate a controlled position. I took a 1/8 size, it's actually a little bit less than 1/8 size position of a single unit into INTC. And my signal for that was more so the steadiness of the market, right? We had tech was looking good. Financials actually looked pretty good yesterday. We'll review that. The market was looking good, okay? It was holding up. It was sustaining the move. And then my signal was here in SMH, the semiconductor ETF, right? Triple R'ing. And, you know, I was looking for the SPY to hold up and not invalidate its move here. So about somewhere around here, I was saying, hey guys, I like the way INTC looks. If the SPY can push up into new highs, I'll probably take it and control my size. So it's exactly what I did. The Qs were looking very similar. We'll check that out. Good move out of the gate where we pulled back just a little bit, did not retrace the entire move and pushed into new highs on the day. So, you know, I feel good about the position. You know, actually, we may have a situation here where we get lucky. I saw some news or some headlines, possibly Intel getting back into the memory business. That's quite the catalyst. You know, sometimes you get lucky. You know, just as where like you can't fear the markets, right? All you can do is execute your model, take clean triggers, and you know you can't fear headlines to the downside. Favor the best companies in the world, you know, leaders, right? Because they don't get so many short reports, or like we're not talking about penny stocks here, right? So just as often as you may get an analyst downgrade or whatever it may be that could gap something that you're in down, you get the same thing to the upside, guys. These things even out. So just control your size and remember that this is execution, which builds compounding, right? We're taking our triggers, we're controlling our size, we're executing when the market tells us to. Okay, we can't predict what may come headline-wise. You just can't. Anyways, look, let's just go ahead and jump in, guys. I have quite a lot that I like. Market breadth is very constructive. We've got the RSP here, triple R'ing again, possibly pushing back up towards highs. IWM also catching a little bit of a bid. Look at that, right off of the prior all-time high level, trying to triple R on IWM. That's a trade idea that I actually don't have the list here. We could look over to TNA through yesterday's high on IWM. So actually, I'll go ahead and make this point now. I want to see follow through in this move. The market has really lacked follow through. Okay, so great move out of the indexes, out of the markets, momentum, steady buying. Okay, good closes pretty much throughout. I want to see follow through today. Okay, I don't want to just roll back down, sweep yesterday's lows. I'd really like to see follow through. Futures are looking, you know, decent. So Let's see. But this is an idea that I do not have on the list, guys. Through yesterday's high on IWM, would confirm that triple R trigger, retracement reaction at around our level, remount of the 9. TNA is the vehicle that I like to use for small caps. And jumping in, let's just hit the list, guys. I've got quite a lot I want to cover. I've got, looks to be about maybe 8 ideas here. I'm going to just go through them. I'm showing you guys the same thing over and over and over again. And then I want to get into a couple of sectors that are quite attractive to me, specifically retail, finances starting to look attractive, and then I want to talk about emerging markets and the opportunities that I see. Guys, I'm going to just try to get through this today because there are a lot of names. If you want the watch list, just comment below. Okay, I will drop the watch list. It's the leaders in these different sectors that we talk about here today. But let's just start with some triple R's out of my Focus 50 list that I like. So we've got a shake and go possibly here. So a breakout, fake out, shake out, pulls back, hold structure over yesterday's high, would probably initiate over the 9. That would be a retracement, reaction, remount of the 9 here on APLD, a theme that remains strong. AI infrastructure build out. This is attractive. I want to see follow through in the market. I'd love to see violence out of the internals. Let's keep it moving. FCX, I have been talking a while now that I would like to get into a copper trade, and this is really ripping and running away. I said, wait, it will pull back. Let's see how it acts then. This is a multi-year box breakout. That is the gray zone that I have here. So, we got pretty vertical coming out of the box breakout. We're pulling back. We want to see it react at or around that level, okay? So get the first triple R after the box breakout, something I say a lot here in these videos. A trigger, let's call it through Friday's high, is on my radar, okay? Absolutely. This rolls over into MP, sort of the same analysis, okay? A hot sector that was sort of running away. Getting some headlines and a short report is what happened here on MP, but this is just simply a change in character where we look for the first triple R. So a change in character, we're tracing back to this yellow line as a prior all-time high from over a year ago, but we've got our 50 here as well, so it's a retracement reaction at or around our levels, remount, so getting ourselves through yesterday, Friday's high would be a remount of the 9, attractive for me there on MP. And sort of the same idea here on UUUU. I did just recently take a trade here on the U's, made over 100% on that. And I said, hey, I am interested in taking this trade again. We've got our change in character. It tried to break out. So we now have a shake and go with possible triple R trigger through yesterday's high on the U's is going to be on watch for me here today. Nail, guys, this is a bit of a narrative, right? The current administration is attacking the home or housing crisis, right? There's not enough supply, right? So they need home builders to start building more homes. I do expect, and this is purely speculation, but I do expect some legislation to come to this industry. The administration wants to attack affordability. Homes, mortgages, all that is a big part of making that happen, right? So we had a little bit of a breakout here. We're pulling back into our levels. Next time through that level, back over the 200 could be attractive for me here on Nail. You could look at XHB if you want to tighten up that volatility a little bit. Nail is basically a 3x leverage or 3x multiplier of the movements you get here on XHB, the home builders ETF. But we're trying to change character here, guys, and we're getting a retracement reaction at around our level back over the 9. XHB is attractive. And I want to talk about space. This is the first sector. I've got a space watch list here, the leaders within the sector. If you want it, guys, comment. I will drop the link in your comment. And I've got a few that I like here, but this is what we're looking for. We want the sector, the ETF, to pull back and give us a triple R and then roll that into our favorites within it. ARKX, I believe it is, would be maybe a better ETF to be tracking. I've not looked at this yet today. Give me just a second. Yeah, same thing here, guys. Look, we got a breakout that's pulling back. Maybe it reacts off of our level and re-triggers, and then we're going to roll into stuff like RKLB and look for triggers. I have a few more, but I'm going to show you 4 of my favorites in the sector. We're getting a simple retrace. Like we need, guys, wait for the retracements, okay, and see if it reacts off the level, re-triggers over the 9. That is a resumption of trends. See if they step in and buy this thing back up. Look, it's just pulling back to the prior all-time high. All right, so, and frankly, the swing low, it could pull back more and still hold structure. So this is on watch, along with RDW, something I discussed yesterday, I believe. This is trying to change character, but it's doing it on volume, guys, and it's simply pulling back to the 200. Next time through this, structural trend here, this technical trend line that it's been struggling to get through for a while now. I got through it. So this is a shake and go. It's a breakout, fake out, shake out, pulls back into structure, holds a recent swing low. Okay, back through that level is attractive to me. Look at this accumulation. We're not the first ones of this trade, and I don't want to be. BWXT. I'm just going to fly through these last couple in the sector, but guys, go through the list here and find your leaders, right? Look for triggers. BWXT is, cup and handling is one way to look at this. Back over the 9 is attractive. And then HWM, last one that I'm going to say, but there's quite a few on this list that are attractive. I'm sorry, there's a emerging market space sector one that I want to review just after this. But yeah, fantastic. Retracement, reaction at around our level. Trying to get it, right? We've not confirmed yet. Wait for the confirmation, which is back over the 9. Retracement, reaction, remount. And we've got EMBJ. I could not say that yesterday. This is a Brazilian aerospace defense company, and it's been running away. I've been saying I want to see this thing pull back. Okay, give me my triple R retracement. Let's see if we can get a reaction here at the prior consolidation. A little bit of a pullback there. It wasn't very deep, but guys, frankly, any reaction above this prior all-time high level and a remount of the 9 is going to be attractive. We're aligning the hot emerging market theme with aerospace and defense theme. Okay, I like it. CCL, one that we were talking about here in chat yesterday. I know at least one of you are in this move. Fantastic trigger here back through the 9 the other day is when I believe you guys got into it, but there's a bigger picture trade to come here because this is a multi-year sideways consolidation, a box breakout. So, fantastic entry on that. You know who I'm talking to. No reason to let go of that. I know you controlled your size. Typically, we like to do quarter size entries below the box breakout level, let it break out, pull back, confirm, go up to full size as we confirm that box breakout, which tend to have legs. GLXY, one that we have been talking about a little bit in chat recently as well. Look, this was our most recent triple R trigger that we talked about here. Fantastic trade, and it is pulling back, holding its level still, and we have earnings pre-market today. So the idea here is if we get a positive reaction to earnings, roll this guy over to the weekly, back through the 9 on the weekly, or we could just go back to the daily and say if we get a positive reaction to earnings, it's a retracement reaction, remount of the 9. If this thing has the heat, I do like it. This guy it's really trying to change character here. It's got some inflow, it's got some accumulation. It's attractive. Let's just see the reaction to the earnings report. I want to revisit here very quickly another model of mine, the gap down reversal. Guys, we're looking for the strongest companies in the world. You get a gap down on Jensen saying something at a conference in Vegas, right? Sort of related to the company, but what it did was give an opportunity to see if Wall Street steps in and buys this thing up. It gapped us down to the prior all-time high level. This is what Wall Street stepping in and buying it up looks like. It held the gap down level, re-triggered here through the gap down highs. Fantastic. That is the shake and go. It's a very effective model on the leaders, okay? When these things gap down due to whatever it may be, sometimes it's an earnings release and you get a gap down on earnings. Do they step in and do they re-trigger it back through that level? It's institutional behavior. It's them buying the dip on the best companies in the world, okay? This right here, my friends, on a $73 billion company, that's not retail, okay? Wall Street stepped in and bought this dip, held it, curled it up, re-triggered. Great trade there. Let's talk about retail, XRT. I was talking about this in chat last night, okay? This is a shake and go on an ETF. This is the retail ETF. We had our box breakout. It broke out, fake out, shake out, pulls back into structure, reacts off of it, and is re-triggering. Beautiful close on this yesterday. Continuation in this today. I would suggest pulling up your retail list. I've got mine here. Okay, if you want it, same thing, just comment. I will drop the link in your comment. But a couple that are immediately attractive to me. This is putting the momentum of the market behind us. Yes, we need the broad indexes to be attractive, but also roll that into the sectors, okay? Find triple R's in the sectors and then find your favorite companies within them, the leaders within them that are also triple R'ing along with it. That's what I say, putting the momentum of the markets behind your positioning. Look at this, almost the same look here. Retracement, reaction. This is on watch here, Victoria's Secret, AEO, another one that's attractive in the retail space. All right, retracement, held that gap level, re-triggering back through the 50. It is TPR. Same deal, guys. We got a strong company in a trend backed by growing fundamentals, retracement, reaction, remount of the 9. All right, let's roll into emerging markets, guys. You have heard me talking about these for a while. A lot of them are running away, right? So we've been needing to wait for a retracement, reaction, and remount. But yesterday, India, and right now, the Indian Nifty 50 futures are absolutely ripping. I've been talking about this trade idea for months now. that if there's a walk back of tariffs, cancellation of tariffs, Indian market has been affected by tariffs, period. They're in a more than a 15-month consolidation zone. Let's just pull it up. Okay, this box here, this is the weekly chart on the Nifty 50, the Indian market. We'll just call it that. Anyways, guys, look, this thing is trying to break out of the box, but I've been saying it probably needs the catalyst of a walk back at the very least of tariffs. Well, that's what happened overnight. This thing is absolutely ripping, okay? This is a clean weekly triple R trigger, but look what it did on the weekly, all right? It pulled back into structure and it's reacting off of it. The big trade here, I think, is letting this get out of this box. This is more than a year-long sideways consolidation. Getting out of this box here, guys. First triple R above, very, very attractive. I do have a list of a few ADRs. I'm a U.S. citizen, no matter where I live in the world. Some of my friends think I'm not. So anyways, I don't have access to freely trade the Indian markets, but there are some ADRs, okay? So we've got HDB, meaning these trade on the US markets, the NYSE, and options are available. Be very careful on your spreads on these options. But look, guys, retracement reaction at around our level. What's our level? The 200, pretty significant level, okay? So back through the 50 on this guy is getting over our moving average, retracement reaction, remount. I would probably look at something like quarter size because we have a gold zone here. It should be gray. I'm not sure why it's gold, and it's also not properly adjusted. So let's move that up. Let's make it the right color. And what we're looking at here is possibly getting a quarter size entry to a bigger idea of what might become a box breakout. I don't hate it at all. IBN is another one of them. Like there's only like 6 or 8 ADRs for the Indian markets that as a US trader I have access to. This is a retracement. We're looking for a reaction and a remount. So reaction could be around the recent swing low, which is right here that it's currently holding back over the 50. Quite attractive. INFY is the last one, and this isn't the most attractive chart, but if it can start to trend a little bit more, same idea. We're starting to put in we have a box that, we could look for maybe a triple R in the upper end of that box. I expect things to be pretty rippy out of the Indian market today. So don't jump into it, right? Even if it runs and breaks out, that's fine. Wait for the next triple R is going to be more high probability. Let's look at the Peruvian market. Let's look at my favorite. Guys, if you want my emerging markets watch list, it's right here, okay? We've got India, Colombia, Chile, Brazil, Peru, Spain's on here, Greece is on here. I looked at some of the hottest markets in the world and pulled the ADRs, put them on this list, the ones that were attractive. So BVN, let's go to the daily here. This thing is absolutely ripping and running away. What are we doing? We're waiting for a retracement. Let's see if we get a reaction and a remount. Jumping to Colombia, let's look at EC. All right, Colombia market is hot. I'm not going to go through each one of the ETFs for these markets. They're all hot, okay? That's why they're on this list. I'm looking specifically at my favorite ADR for each of these emerging markets or these countries, okay? This is Colombian stock that is breaking out on volume. We're looking for a retracement, okay? Where does it turn around? Where does it react? We can see a clear range here that this thing is putting in. All right, so can we get a triple R below the range and then let it break out and load up to full size? Something we're going to be monitoring. Chile, SQM. All right, this is my favorite. There's more than these names that I'm sharing with you today on this list, guys. So if you want it, just ask. But these are the ones that are setting up, okay? Possibly setting up. Ripping, running away. We can't chase. Look. Wait for a retracement, a reaction at around our level. What's the level? I don't know. Maybe we get down to the 50. Maybe we turn around today and we call it this recent swing low right here and a remount of the 9. This is on the radar back over the 9. And then Greece is the last one here today. I guess we'll end after this. But CMRE. This is, I tried to take this trade last week, 2 weeks ago, whatever it may be. But guys, I just want to show you that like these triple R's, this is market structure. This is trend continuation, and I'm giving you the entry. I'm giving you the entry model for playing trend continuations, okay? I'm giving you a money printer, and it works broadly on the leaders in a trend backed by growing fundamentals, okay? So emerging markets is a leading theme. This is a leading emerging market. This is a leader in the Greek market with an ADR that I have access to, all right? We're running away. We get a retracement reaction at around our level and a remount. We were talking about this a week or two in chat. Anyways, guys, what I'm trying to show you here is that structure is structure. Okay, triple R is the fucking sauce, guys. So look, come to Saturdays if you have questions for me. It's not a pitch, it's not a webinar. I do live market analysis and spend an hour doing AMAs is what it's been each of the last 4 weeks. That's it, man. I want follow through. Follow through today is going to be attractive to me. There are some names that are attractive to me off of this list. I'm going to continue to control size until we really are in that confirmed follow through market, right? Really having legs on moves, not popping up to highs and rolling back down to the swing low area, right? As long as that happens, we'll wait for it to roll down to the swing low area, re-trigger back over the 9 and initiate controlled risk, okay? Stop calling top until we get confirmation would be a little bit of ending advice there, guys. Stay safe, manage your risks. Let's go make some money. I'll see you soon.